เคครับก็ถึงเวลาเซสชันเริ่มเซสชัน
The Thai Unit Feedmill session. Hello to everyone who is joining us here at the hotel and also online. This is our performance results session for the first half, and the second quarter for us has been a good quarter. Before we begin, allow me to introduce our executives. We have one new executive joining us, that is Pianut Maditanapan, our new CFO. Today we would like to begin with an overview, so I would like to invite our CEO, Mr. Pranasak Bunmecho, to speak. Hello to the analysts joining us here today and also online. I would like to provide a summary for you. This year, in the second quarter, our sales at 1,296 million Thai baht. This is a 3.8% growth quarter on quarter, and the main reason for this, for the decrease year on year by 3.5%, is because of our strategic moves. We shifted to OEM rather than in-house production, and we also have lower fish feed sales due to the product prices that reduced in the last quarter. Nevertheless, our gross profit is at 243.5 million Thai baht, increasing 21% quarter on quarter and 98.9% year on year. And our net profit has increased significantly to the main reason for our gross profit is thanks to our profitability. We have managed our raw materials, we have increased our production yield, and we have lowered our costs. This has led to our net profit in the second quarter closing at 129.4 million Thai baht, increasing by 170.9% year on year and growing quarterly by 24.4%. In this slide, we'd like the analysts to see our track record in terms of gross profit and net profit. We want you to see our performance, that it continues to grow for TFM compared to the past 3 years where we just entered the stock exchange. And the second quarter for this year, we have been able to produce positive results, and we continue to pursue this for the third and fourth quarter. That will be the peak season. Our results for the first half of 2024, the sales increased 2% year on year, and our gross profit went up 161% year on year, up to 444.6 million Thai baht. And our gross profit went up to 17.5% from 6.8%. And thus our net profit for the first half of this year closed at 233.4 million Thai baht. This is an increase of 1,064.1% year on year, and this is an amazing result for us in the past 3 years. Our dividend policy for the first half of the year, that has improved. Our board issued a resolution to pay a dividend at 0.3 baht per share. This is a 64% payout ratio. This is higher than our policy of no less than 50%. And this is the highest since our listing on the stock exchange. Our record date is 20 August of 2024, and the payment date is the 29th of August of 2024. And this is a look at the domestic market in the second half. The shrimp production was at 65,000 or so. tons. And the sales for shrimp at TFM has gone down by about 10% due to OEM and our export sales. Export sales dropping to Sri Lanka. In Sri Lanka, they had issues with illness, and we expect things to return to a better state and exports to improve. We have also started expanding to other countries and diversifying our portfolio to increase our top line growth. We have started to export to, for instance, Vietnam and Malaysia. And in the following quarters, you will see more exports from us. And sales in the country continue to grow. And this has led to our market share in the first half from 27 coming up to a higher level. And I'd like to explain for many of the analysts here today about the black-chin tilapia situation. There has been news about this in the Thai waterways. So allow us to provide an update from our sales team that have been speaking with customers around the country. Our customers have not been impacted by this. And this is mostly because our shrimp farmers, actually, black-chin tilapia has been around for about 10 years already, and our farmers are experts. They have in-depth understanding. They know how to manage the black-chin tilapia situation. So they treat the water, they filter the water, they have in place special ponds to clean and filter the water before it's used. And this is a protocol from the professional farmers here in the shrimp farming industry in Thailand. And other farmers who don't have a better understanding, they don't treat the water. So overall, our customers who are shrimp farmers, they are not impacted by the black-chin tilapia influx. And this slide is to help you see our new product launch. In the past quarter, we have done marketing of our new products to replace our older products. And this is shrimp feed for smaller size shrimp. The R&D team has designed the process and a new formula. And this is a formula called Burby. And this it was called Burby because we squeeze the raw materials into pellets. And we have our ProFeed, Nanami, and Aquafeed brands. And we expect the 2S product to do well. We expect it to take up 3 to 4% of our shrimp feed portfolio. And we've been able to introduce smaller sized pellets, meeting the needs of our customers and reducing the costs as well. We reduced factory costs as well. And we've also reduced the wastewater for farmers because the smaller sized feed, it helps answer the pain points or respond to the pain points of farmers. And the product has been well received by our customers. And this is a look at our crumble feed. Our farmers in the past, their perception was that they would use pellets that were compact and that would lead to waste in the water, and shrimps would not feed well. And this was a pain point for our farmers. So we came out with the 1 millimeter pellets or feed. And this feed does well in the water. It doesn't dissolve so quickly. So shrimp are able to eat more, to consume more, and that helps with the shrimp raising. So we've come up with this new method for our farmers, and it is something that has again received positive feedback from our customers. And I'd like to invite our CFO to speak now. First of all, for the first half of the year, our performance was better than we expected, so we would like to update and adjust our guidance. The gross profit margin was the previous guidance was at 12 to 14%. We're adjusting it upwards from 16 to 18%. And this is due to the strong first half performance, which was at 17.5%. Our sales growth, we are adjusting as well. We're reducing it from 10 to 15% down to 5 to 8%. As our CEO has said, it's going to be 5 to 8%. And the reason for this is the end product prices and our portfolio mix that has changed. We're going to reduce the livestock feed in our portfolio. Another key takeaway for you is that even though we have challenges in terms of the Thai market and regarding the price of fish and shrimp, our sales team is very competitive and has been able to increase our market share despite the market conditions. And this has our local sales remain relatively consistent. And TUKL in Indonesia has had very strong performance, and this has helped us to maintain our shrimp sales. What has gone down is our OEM and export sales as well, which we are trying very hard to diversify into other countries. As for our margin, that has improved. As our CEO mentioned, there are many reasons for this. We have our portfolio mix, where we have reduced the livestock feed due to the lower margin, and we are increasing the shrimp feed and the fish feed, which have higher margins. We also have been managing our procurement, optimizing that, and we're trying to reduce our costs in the factory, whether it's the electricity bills, the repair and maintenance. We're working to manage every aspect and better, and we are increasing our production efficiency to match our expected sales. And the summary, of course, is as mentioned, we are confident that our growth and our adjustment is something that will be sustainable, and it reflects the dividends that we have or that we are paying out to better serve our shareholders. And let's look at the details of the products. For the shrimp feed, if we take a look year on year, it's relatively the same. It increased slightly, and the reasons are for TUKL, the outstanding sales have increased more than one time. The sales team there has been working very hard, and they have been expanding their reach in East Java, not just in East Java, but in other parts of Indonesia as well. They have adjusted their formula and also the production processes. And thanks to all of these adjustments, this has led to outstanding growth for TUKL. And in Thailand, there has been a decline, but this is because of the OEM and export. And we have local sales as well that have continued to grow by 3%. And for the second half of the year, we expect to see more growth. And there's a climate change. The peak season may shift to the third quarter or the fourth quarter. So we forecast that our domestic sales will continue to grow. And in terms of the fish feed, it's gone down by about 2%. And sea bass, as we mentioned earlier, the fish prices aren't that great. And the market share is like our shrimp share. We have been able to increase our market share for other fish feed. It's similar to the year before, and we are improving our formulas to make them more competitive. And this is something that will help us in the second half of the year, and we'll see better results than in the first half. And livestock feed, we have changed the business model. In the past, we were producing in-house. We are now and we are hiring others to do our production, and we have streamlined our SKU. We have kept only those that provide margins that we're happy with, and we're selecting customers that have a strong financial status. Their size doesn't need to be big, but we're focusing on the margin. And for Pakistan, there has been a decrease, but this is a seasonal result. Their products change according to the season. For instance, in one season they'll sell something more, in another season they'll sell another product more. So it's based on the local market situation. And if we take a look at the breakdown for the second quarter, it's shrimp feed that is at 63%, fish feed at about 30%, and livestock feed is at about 6%. If we compare this to the year before, livestock feed was bigger than this, but we have adjusted our portfolio mix to increase our margin, and that is why the livestock feed has at this ratio. And then in the second half of the year, this may lower even more for livestock feed because of our business model adjustment. And this is, if we take a look at the performance by company or country, in Indonesia is TUKL and Pakistan is AMG and GFM that we have invested in. As you can see, in Indonesia, the growth has been very significant, and here in Thailand for TFM, the sales have dropped a bit, but we expect an improvement in the second half of the year. And you can see in the map as well, we have a royalty fee from our partner Avanti in India, and we have royalty fees for TFM based on the products that they use our formula for. And let's take a look at the changes that have led to our net profit surge year on year. You can see in the last year, net profit was at 47.8, and now it's up to 129.4 million Thai baht. And for our gross profit, this is the main factor that has led to an improvement in our net profit. And we have, again, an adjustment in our portfolio mix. We have increased the higher margin products, and our raw materials has gone down by about 10%. And we have R&D to improve our formula, to maintain the quality and for more efficiency. And we also have the yields at our factory, which have improved, and we have reduced our factory costs as well, as mentioned earlier. SG&A may be a bit higher than the year before. This is because of our employee costs. We have employee benefits, we have performance benefits and such. And we also have selling expenses and promotional expenses. In the past quarter, we had a customer tour, and if our customers were able to meet the targets, then we actually provided them with a trip abroad, and this is to motivate them more. And TUKL as well, they have expanded their market reach in Indonesia, and Indonesia is a very large country, and the transportation costs have increased due to that market expansion. As for other income, this has been adjusted. Other income comes from the royalty fee from Avanti in India, as mentioned earlier. And last year we wrote off our farm for R&D, and that was a one-time impact of about 20 million. And it's reflected in this year, so the costs have gone up in that respect. And we've also invested. We're waiting for investments in our factory as well. And the financial cost has increased just a bit. It's from TUKL. They are able to sell more, therefore they have higher needs for support for their working capital. The income tax has increased just a bit because of our increasing profit. and this is under BOI and non-BOI. And because we have non-BOI, we have increased income tax. And this has led to a significant growth in our net profit year on year. And for quarter on quarter, the gross profit has increased from 16.1% in the first quarter to 18.8% in the second quarter. And this is mostly a seasonal effect because the third and fourth quarter, this is the peak season for our business. And the volume increases and our gross profit, of course, increases. And we have improved our production efficiency continuously. As for other areas, we have the royalty fee from Avanti, which has increased, reflecting their higher sales. And we have been strenuously collecting our debt as well, and credit. The SG&A has increased. So overall, the quarter on quarter, but this has been offset. So the quarter on quarter, we're still looking good. This is a look at our raw materials. There's been a change by 10%, and you can see the trend of the prices. If we take a look at if the trend of the price is good or okay, then we hedge the prices, we lock the prices in. And if the prices increase for a certain raw material, then we buy less. We are looking for suppliers to improve our costs, and we're also working continuously to improve our formula. And this is about cash flow. Cash flow has increased significantly. This is due to our operations. And in terms of investing, it's mostly to improve our safety equipment in the factories. And we might see some effect in the second half of the year. And cash flow from financing, it's mostly for the payment, dividend payment. We have more investment to improve our production efficiency and also to pay out dividends, as mentioned earlier. And the ratios, the cash conversion cycle didn't change much. ROE is in line with our increasing net profit. Take a look at the interest-bearing debt to equity. It's still low at 0.08. If our net DE is at 1%, that means that we can request more loans up to 2 billion baht. That's a potential upside for us. It presents an opportunity for us. It shows our readiness to move forward. I would like to emphasize and explain our financial guidance once more. Our sales has been adjusted a bit down to 5 to 8%. Our gross profit, we've adjusted upwards to 16 to 18% from 12 to 14% previously. Our SG&A, as our CFO mentioned, it's 7 to 9%. Our dividend will be at least 50% as usual. And our outlook, our strategy, we will continue to forecast our costs. And for livestock feed, we are not producing on our own. It's not in-house. It's now OEM. This is to increase our margin. We're going to focus on higher margin products in our portfolio mix. And in the areas where we're experts, like in shrimp and sea bass feed, we will focus on that. And in the third and the fourth quarter, you will see new brands being launched. We will have new SKUs to better meet the needs of our customers. And I believe the TFM will continue to grow. We will continue to expand our market. There are areas where our market share is 20% up from 17% in shrimp. We are 37% from 35% for sea bass feed, and for other fish, fresh feed, freshwater fish, we're improving in that respect as well. So in the third and fourth quarter, you will see an increase in everything. And this is a positive trend for us. Continue to see growth. And in Indonesia as well, we're looking at more growth. They're going to continue to expand their portfolio. And our gross profit attainment from the first half of the year at 17.5%. It's not the high season yet, but from the third and the fourth quarter, or the third and fourth quarter will be the high season, and we'll have a soft landing. The second half of the year should be better than the first half of the year. In the second half of the year, we are going to focus on our sales and cost management in the factory, whether it's the raw materials, cost management. We do have some backlog, and we're going to pursue appropriate pricing, and we continue to save in that respect. And we will continue to increase our production efficiency. We will increase our market share. In the second half of the year, we expect our sales to improve and to grow continuously. And we see opportunity, whether it's in our new SKUs that have been launched, as well as new SKUs that we're going to launch in the third and fourth quarters. And this is especially for freshwater fish. And so the trend for the third and the fourth quarter, the last 6 months of the year, will be good. That is our expectation. This is, as we mentioned, we want to adjust our guidance for SG&A. It's mostly resulting from personnel expenses, and we have promotional expenses and higher transportation costs due to increasing sales. And that is the end of our presentation. If there are any questions here in the conference hall or online, we're happy to address or to answer those questions. Hello, I'm from Gongxi Securities. Today I have listened to the whole presentation. Thank you so much. I'd like to ask about the sales budget for 2024, the growth at 5 to 8%. The first half of the year, it was only 2% growth. That means the second half year-on-year growth would be like 7 to 8%, right? For the second half. Our forecast for the sales, as mentioned in the third quarter, this is the peak season for us. And the fourth quarter, the season for this business is the first and second quarter. But in Thailand, there has been some weakening. Indonesia has weakening, so the high season, this will lead to increased sales. And in the first and second quarter, what we've done, we will see an impact from our actions taken in the first and second quarter. And so could I also ask, I don't have the first half sales for the shrimp and the fish feed and the livestock feed. If we look at the percentage growth in the second half, who will outperform the others? The shrimp feed will be in the second half. We will see an increase in the shrimp feed from compared to the first half. Will there be a double-digit number? It will be more than 10%. In the second quarter, the market shrunk a bit. And the sales team told us that the weather is so hot, the weather has changed, there's rain. Shrimp is very sensitive to these changes. And so the season this year has shifted a bit by about 2 or 3 months. So the growth in the second half of the year, if we compare it to previous years, will be higher. And the executive said earlier that the shrimp production has been delayed. I'm not sure if I understand correctly. When you do shrimp production, is it in March or April? That's when they start to raise fish. Yes, it's in March or April, but we noticed that the weather in April was so hot. That's why shrimp raising was not successful as in past years, so it was delayed. And this year, the peak season will be in the 8th, 9th, and 10th month. So there's a delay of about 1 to 2 months. And if we compare to the third quarter and the fourth quarter, if we look at the sales, which quarter are you going to focus more on? The third quarter. But this year, there may be not much difference because the fourth quarter there will be an overlap for October because of the delay in the shrimp farming. There might be just 8 to 10% compared to much more, 20% in the past. Let's take a look at livestock feed again. You've changed your strategy to OEM from in. And have you done this for a while now? Has it been taking place for long? We started OEM quite a while back, but it's in a small portion. In the first half of the year, before that we were producing in-house and we had smaller OEM, but we considered this and we know that our strength is in shrimp and fish feed. Therefore, we don't want to stop our livestock feed because this is a way for us to diversify our portfolio. So having many different kinds of products is good. Therefore, we have decided to stop producing livestock feed, and we are now having our livestock feed production. It's all OEM based, 100%. So for the second half of the year, you will not produce OEM livestock anymore. And will it be a lever where you will maintain? Is there profit at the same level? Yes, there is profit because after we have shifted to OEM, we will choose only those products that are the top ones. And this is a back-to-back, which means that we will have the volume. We don't have to have risk in production anymore, but we see clearly that there is profit for each SKU. And this will make management of our portfolio much easier. And before this, the livestock feed, you sold all of it, right? You sold everything, right? You sold for pigs, for ducks, for all kinds of livestock, right? Yes. And when you're saying clean, you're talking about only pork? So, and your OEM is one of the top producers? Yes. Yes, this is the trend. And for the fish feed, what's the trend for sales? The trend for fish feed is an improving one. The sea bass feed, there was the climate, the hot weather, and so sea bass raising has weakened, but we will see an increase in that. Farmers have delayed their operations because of the climate. We are continuing to diversify though, and we are always adjusting our formula to meet the needs of the farmers. There will be more shrimp and fish raising taking place in the second half of the year. Are we seeing a change? The price of the feed, is there a change? We have not adjusted it. On this page, the unit price, when the fish price goes down in the first half, farmers will use a lot of protein, and protein costs a lot. When the fish price goes down, then they use less protein, but they're still able to raise the fish. So the unit price goes down as well. And one more question, the gross margin, the curve for gross margin. You can see that you have a breakthrough. It seems like a new trend. Is this a normalized trend? It's more about sustainability. We have been taking a lot of action. There are a lot of components. We have internal management. Some of it comes from raw materials. There are a lot of factors leading to this upward trend, and we expect this to be sustainable as well. From the past 3 to 4 years, raw materials were very expensive, and the seasons right now, you can see that we are selling different sizes in our fish feed, and this is more sustainable for us for our gross profit. And something else that is very important is our top line. Today, we are going to increase our sales in many of our products in the portfolio, whether it's fish, freshwater fish, sea bass, shrimp. We're expanding abroad as well. We are penetrating, for instance, Vietnam and Malaysia in the Middle East and Saudi Arabia, Oman. And based on your guidance, the first half of the year, the gross margin of 17.5. The second half is stable compared to the first half for you. It's your numbers are in the middle, so I'm not very sure. It is possible that things will be stable. And can I also ask, is it possible that is it because of your change in your product mix? Your gross margin for shrimp is the highest, right? And then fish feed and then livestock, right? When it comes to gross margin, if you do less livestock feed, doesn't is that the reason why your margin has gone up? So in the future, if you continue to reduce your livestock feed ratio, will you be focusing more, or will it go more to shrimp feed in 2023 to 2024, where we've seen the improvement in the gross profit margin? It's also because of the portfolio mix, as mentioned. But if we continue to decrease the livestock feed, then yes, we will see improvement. But there's risk management involved. We want to balance this. And do you have a targeted sales growth for Indonesia for this year? Yes, it's about this much, about 100%. And and they're only doing shrimp feed, right? For Indonesia, yes, it's only shrimp feed. And their shrimp feed compared to our shrimp feed, is the gross margin different? They're very similar. Last year, TUKL had a loss, but they have turned around this year, as you've seen. They have improved everything, back end, back office. The sales has improved, so their margin is similar to TFM. And the market share, what is their market share? They are their rank is Indonesia is a very big market, so they have a lot of room to grow. And the shrimp farming in Indonesia compared to Thailand, is there a big difference? Big size difference in Thailand? It's about they are much smaller in size in terms of shrimp production. There's a lot of room for growth in Indonesia. In Indonesia, is it because they have big players there, bigger than us? That is one factor, but in the end, we have to compete in terms of quality and also the production costs. These are very important factors. If the quality is not good, the quality has to go hand in hand with the cost. And the quality is one of our focuses. There is a lot of room for growth for us, and we're looking for more opportunities. We're pushing for further growth in Indonesia. Thank you very much. I'd like to ask about the outlook for the raw materials in the second half of the year, and also the margin for the fish, shrimp, and chicken feed, the gross profit. Can you expect? Let's talk about the raw materials first. Raw material prices, the trend is not increasing. They're either stable or softening. And we are very careful. We are trying to secure the raw materials. So far, we don't see any change. Things are getting better. And in terms of the gross profit, it's in our notes. The shrimp is at 19%. Fish will come down to about 70%, and livestock will be a single digit. Could I ask about TUKL? Could you explain a bit more? TUKL, last year you told us that the sales that they broke through, and in the second, third, and fourth quarter, the utilization rate, the efficiency. Could you give us more details? And if we take a look at the slides, it looks like the breakdown for shrimp feed on page 14. If we take a look at this graph, TUKL in the selling volume, what is the contribution from TUKL? TUKL, their yield is very good. It is 99, 98, 99%. Their sales, you can see TUKL contributes about 90%. And the utilization rate is at about 60%, and there is room for growth there. There's no need to invest more at this moment. We can continue to increase sales with them continuing to manage production internally. And this means that the growth should be driven by TUKL, right? This is a faster growing market than the Thai market, right? And if this is the case, can we run the E-rate, gross margin, or the yield? Can it be even better? Yield can be at around this rate. It's already very good. And the utilization rate, if we can increase the sales volume, then this will have a positive impact on our production costs. And if we take a look at the second half of the year, TKL, what's the contribution? What should it be for sales? It looks like TKL is growing faster than the Thai side is. If we look at all the sales, TKL is about 12%, TFM is about 87%. TFM will continue to contribute to the sales, but in the second half of the year, there will be growth from TFM and also TUKL. So TUKL will continue to grow year on year at about 100% for the whole year. And one more question. The high season for Indonesia, what is it like compared to Thailand? Indonesia is a tropical country just like Thailand, and this year the high season will be in the third quarter, which we are entering, and this will lead to a good trend. Indonesia has much potential for growth because our market share is still small there. We had only 500 tons of production there. Now we are increasing to 1,500 tons. We expect to expand even further, and we're going to continue to look for more customers to increase our market share. Our Thai team is in Indonesia working with the TUKL team. And so it has to do with marketing, with management, with our cost management. So this will be a peak for Indonesia in the third and the fourth quarter. I have two questions. First, you mentioned the portfolio management and the contribution from each product. Currently, the shrimp feed is at 63% and it continues to grow, right? Livestock is about 1%, fish feed is about 1/3. If we look at the long term, in terms of risk management, what should be the balance? What should this breakdown look like? And can I also ask you to reconfirm the impact on the local farms? The first question, the portfolio, because shrimp feed and fish feed, as our CFO mentioned, these are our core businesses. We must maintain them. The fish feed is at 29.7%. We have freshwater fish, and also we want to diversify, and our backbone is our sea bass feed, and there are other fish feeds. And livestock feed, we are focusing on profit. And the black chin tilapia situation, it's been an issue, or not an issue. We have seen black chin tilapia for over 10 years. So the farmers, the expert farmers, both shrimp farmers and fish farmers, they invest millions in their water treatment ponds. They are aware of the situation. There is water everywhere in Thailand, and there are black chin tilapia everywhere in Thailand, but these expert farmers have excellent filtration systems. They have treatment ponds in place to deal with this. What about Pakistan? The income or revenue is only 2%. Will you continue on with Pakistan because of its small size? Does it have the chance to grow like in Indonesia? Pakistan, we are there monitoring the situation. So far, it's in its infancy in terms of the market. We are there to manage the quality and the formula and the portfolio. So far, we want to improve things there and want to continue on. Could I ask about Indonesia? At the moment, their utilization rate at the factory is 6 to 7%, right? And when will they have full production? We expect full capacity within this year, by the end of this year. We are focusing on increasing sales and increasing the utilization rate. The sales will increase from 60 to 100%. So that means almost a doubling in sales, right? Yes, we are trying to increase sales. We are always out there seeing customers, meeting potential customers. And the shrimp feed, the break even, what's the utilization rate for the break even for shrimp feed? It depends. For instance, this factory, TUKO, about 30%. That means the gross margin for them, the CFO said the gross margin for shrimp feed, it's about the same as TUFM's, right? So they may be achieving more than 20%. Is that correct? It is possible. Right now, their results are similar to ours. It depends on the volume as well. And their fixed costs, the margin will improve. And do we have plans to increase the capacity for them? What are the plans? We are in discussions with them about this, but we don't want to overinvest too fast. We want to make sure that our sales lead to positive margins, and we are focusing on reducing the production cost we're going to manage costs as much as possible before we invest more. You said it's 2,500 tons per month. So by the end of this year, it should be up to 2,500 tons, right? The cap is at 2,500 tons. We're slowly increasing. And in the fourth quarter, we'll see a peak. We're trying to maximize capacity. We want you to see that the market is growing and the utility comes from our management. We are always managing costs to improve the margin. And in the third and the fourth quarter, if the trend continues, then we will have to consider further investment. And in the factories that you have right now, can you increase the number of machinery, or do you have to build a new factory? We do have more space in our current factory, and we will invest according to the plan and according to the market. And we don't want to overinvest because if it's too early, that will end up leading to more costs. And we will have a better idea in the third and the fourth quarter. And if you have to invest in new machinery, what will the investment be about? It depends on the size of the machinery and the capacity. And if you increase the production capacity, will you increase by another 2,500? So you have to monitor the situation, right? You don't want to overinvest, right? Yes, we need to take it step by step. We do have the ability to manage things well. When we have a clearer picture and if things get better, then we do have space for additional increase in machinery. And in Indonesia, this is a country that has islands. When you have your factory, and how do you expand there? We are in East Java, Bali. The products are sent by ship. We go to every area in Indonesia where there are shrimp farmers, but we are very selective when it comes to customers. We are looking at all over Indonesia. So, do I understand correctly that your SG&A to sales from 7 to 9% for TUKL, their SG&A is higher? TUKL has SG&A increasing because of the increasing commission that has gone up according to sales, and also the increased shipping costs because, again, their country is so expensive. And the increasing oil prices, this will lead to higher risk in that regard, right? Yes, that there is some impact from that. There could be. And could I also ask about Indonesia? The capacity of 2,500 tons per month, this is just one shift, right? And can you increase the production shifts? We can, but there will be more OT costs, overtime costs. And Indonesia has laws and requirements regarding that. And what is the maximum allowed number of shifts? 3 shifts. And the target that you have given as a guidance, does this include the utilization rate of 100%? Or what is the U rate for Indonesia? What is your assumption? It will increase, the utilization rate will increase, but it depends on the season. The third quarter will be higher and the fourth quarter will come down. Because you said you would try to reach maximum capacity by the end of the year. So I was wondering about the utilization rate. There's a question from online. It's about the first half you did well, and in the third quarter, will it also continue to improve? Yes, we answered this question. And what factors will drive your top line and your gross profit? For the third quarter, we are seeing an improving trend. The factors, this is the peak season, it's a high season for the business. We will be able to drive sales further. We have stronger portfolio management, cost management. We are proactive. We are careful. We are focused on increasing profit, and things should go according to our expectations. And that is the end of TFM's presentation. Thank you to everyone joining us here today and also online.